Good afternoon. This is Todd Horwitz, coming from the floor of the CME Group in Chicago, and we're looking at what we'll call the gold mine, and of course, gold continues to push higher in the face of a lot of things that may push it higher and could push it lower. But of course, you see this trade as the markets push through, and now broken through another level of resistance, which looks like gold could be on its way to 1,300. And the question is this a fear or a commodity trade? And I think that we all misunderstand the markets a little bit. And I think here's where you have to understand that really gold is another commodity, and it typically it works its best when the markets when the dollar is weak, gold will be stronger, and when the dollar is strong, the gold will be weaker. And of course, that is something that we look at, but you're seeing now that even with a stronger dollar, you're seeing that it's a move higher. And what really happens is that we're now seeing, I think, a little bit of fear, a little bit of panic in this trade. So you look at it, and when we talk about the overall view of the market, the fear of the dollar versus gold, they should not, in true retrospect, should not go in the same direction. But that's what you're now seeing. And that shows you that there's a lot of fear out there on the street. And you're now looking at gold as a currency, because it used to be, obviously, we used to be backed by the gold standard. And I think there is some fear with the society starting to take cash off the table. I think with a lot of things that are going on, I think you're seeing, this is one of the reasons I think we're pushing gold a little bit higher. I think there's also a little bit of a squeeze here. And I think you would look for gold. Now again, long-term, very bullish gold, and looking for the bear market to reverse out. And we could be there already. But I wouldn't be surprised to see a pullback down to that 1,200 level again. Of course, I wouldn't be surprised if we saw 13. So I think we have a much wider range right now as we try to push higher. But I think what you're going to see in the next few weeks is you're going to come in one day and you're going to see gold's going to be down 30, 40 bucks, and it's going to just kind of throw in, because I think here we're seeing more of an artificial push higher. So at the end of the day, long term as an investor, bullish gold. Short term as a trader, I'd be looking to sell it somewhere around 1270, 1280. I think that looks for a little bit of a pullback. We could see a spike up to 1,300, but overall, the stronger dollar should create some weakness, and a lot of the other things that are going on. So I think that's the way we see it. We're looking for a little bit of a pullback here first. We'll see you next time. This is Todd Horwitz, coming from the floor of the CME Group in Chicago.